It's an interesting topsy-turvy time in the global markets, and we're delighted to, at Moneycontrol, to have Sachee Trivedi join us. She's founder and director of Trident Capital Investments, joining us from Luxembourg. Sachee, thanks very much for making the time to join us at Moneycontrol. Sachee, you went viral in India a few months back when you made a very bullish argument on foreign capital and Indian markets, making the point about why the Indian markets are sort of inevitable for global investors in a sense. Since then, we've seen a flight of money from India. We've seen some return in green shoots in July. And now we are seeing a shift, of the beginnings of a shift perhaps, and we are seeing a meltdown, say, in the Korean markets. So from where you sit in Luxembourg and you manage a lot of investments, what is your sense of, when you look at what's happening in the Asian markets now, do we see foreign money returning to India soon over the next few months?
So, Balan, thank you so much. Such a pleasure to speak to you. It's a pleasure to speak to Moneycontrol always. This is a loaded question, so let me try to unpack this a little bit. AI is a very, very strong theme, as we all know. There's no denying that fact. And there are almost two parts to AI. One is the supply chain part, where the capex is happening, the memory players, the logic players, the foundry, the equipment manufacturers, and there's that supply chain. And that supply chain, as we all know, runs through Taiwan and Korea and to some extent in Japan and Netherlands. So that there's a supply chain question, and then there is an application side question, which is the question like what all is AI going to disrupt? What those new business models will look like. So there are two parts to this. The volatility that you are seeing in Asia is basically, what I call as, it's a FOMO trade. And, and I think that's what I flagged the last time, we met at the Global Wealth Summit, that you're not investing in Korea, you're not investing in Taiwan, you're investing in that one company that is a very, very strong and critical AI player. But you have to kind of almost differentiate between a country and a company. And as we all know, as fundamental investors, you keep, companies have valuations and companies have revenues and companies have, capex cycles, and you make an investment based on your assessment of those things. Did Korea go too far on that theme? The answer is yes. Their retail investors levered up, there were derivatives positioning, and as a result of that, you see the huge volatility in that market, and that's basically when you try to do a FOMO trade, when you try to do no prices too high kind of a trade, it's a very standard market reaction that then you will have those episodic capitulations as well. So I think that's on the supply side, and you see that in SOX as well. So you see the semiconductor index, I think it is down like 26% or so. And so you are seeing that across, that value chain. The second thing about the application side of things, now again, if you look at Tesla, if you look at SpaceX, right, like SpaceX is down so much from its IPO price. So if you look at those things, people are beginning to question the business model. People are beginning to question, what is the capex and what is the ROI that you're going to get on it. This quarter, we have seen, Meta, Facebook report and Google report, and you've basically seen their free cash flows, come down to single-digit $1 billion. And their capital expenditure is to the tune of $30-40 billion. So you have to ask the question, where is this capex going and what is the return that I can expect and when? And I think the market is beginning to ask those questions, and rightly so. So now, sure.
Sachee, sorry, if I can interrupt a little bit. Just to break this down a little bit more for our viewers. So when you're talking about just a handful of companies driving this, so the theory, of course, is, or the idea is, that a lot of foreign investors went for the AI trade, what you're calling the FOMO trade, if you like. And there are these handful of companies, right? TCMS, Samsung Electronics, a couple of others, and the earnings that were, or the profits that they thought they would get from that is much more than the Indian market combined, which is why a lot of foreign money went out of India and went chasing that high profit. You are saying that there is now a reality check that is coming in and the AI bubble is cooling down, and therefore things might change. Am I getting you right on this?
Yes, because ultimately, there is a price at which the returns start looking unattractive. And you also have to recognize that in September of 2024, India was at very high valuations, I think 24 times or so. And these markets were single digit valuations. So the relative trade was extremely attractive for foreign investors. I think that switch has happened now. So I think India is now looking very attractive at what, like 20 times, and these markets have had a massive run. So I think that from that perspective, the positioning looks
One of the
attractive for
questions that
India.
has been also been raised about the Indian markets is the question about valuations and the PE ratios, which a lot of people thought were inflated, which have got corrected in the last couple of years. Is that an assessment you agree with, and you think that will have that will be a factor when investors make decisions? How much of a factor that will be?
Absolutely, absolutely. So, I mean, was 24 times very expensive? I think the answer is yes. And, even in those 24 times or 22 times forward price to earnings, there was a section of the market that was more expensive than that, and a section of the market that was less expensive than that. Having said that, I think we do need to look at the Indian multiple almost crudely speaking, pre-COVID and post-COVID. And the reason being that post-COVID, there has been a very structural buyer that has come into the Indian market, and that is the SIP flows that we see in the mutual fund industry. And that is a structural buyer in the market today that did not exist in the pre-COVID era. So today, for most of the companies, their valuations are around pre-COVID, are around 2020 levels or maybe 2019 levels. One can argue that 2015 or 2014 levels were lower than that. And I think the structural buyer that is present in the market probably has raised the floor on that valuation versus a 2014 and a 2015. So I think it's a comfortable setup for anybody looking to deploy capital in India.
So, do you see FII money, FPI money returning to India over the next few months? What's your sense?
There are three aspects there. So the number one is, I think, still the Iran war. And you have seen, in the past few weeks, every time there is some hope for, there's a ceasefire, or there's, some hope of stabilization in that part of the region, FIs do return back. So we have seen any trickle that we have seen of FI money has been, coming from that. The second thing is there is a which is related to the Iran war, but there is, an inflation story building up in the US, and there is almost now, an expectation that there might be a rate hike in the US, and I think in the last couple of quarters and more, we were expecting, and Mr. Trump was pushing for a rate cut. So from a rate cut, we might, we are almost having debate about if there should be a rate hike. As we know, when there is a rate hike in the US, again, if you're getting a very decent return in the US, then money does flow out of EM countries. So that is another kind of, a consideration there. And the third thing is, of course, people who are chasing the AI story, and, then it's like there is no AI story in India, quote unquote, then they will come back to India either if India somehow is seen as somebody having an AI story, or if the AI story feels it has really run its course, and in which case a country with no AI story actually becomes incredibly attractive because it's a huge diversifier to the Koreas and Taiwans and the Japans and USs of the world.
So you're making a very counterintuitive point here, right? You're saying that what was seen as India's weakness may well be its greatest strength. There's also a point here that there has been question marks about the future of the IT industry in India and so on. What's your take on those kind of concerns?
So IT industry in and of itself, I think there's puts and takes, right? There is absolutely puts and takes. But then that is not something new. I mean, if you look at a US, if people are bearish, if people are uber bullish about, let's say, Nvidia, Google, Microsoft, Amazon, then there is also a whole raft of companies out there that are down 20, 30, 40%. And I'm talking big names like Adobe, Netflix, CRM, that's Salesforce.com. So those puts and takes also exist in the US market as they exist in Indian market and as they exist everywhere. I think this is where we need to take a step back on AI And there are almost two things, that I want to, sort of three things that I want to decouple here, from the AI story perspective. Number one, people are very focused on the supply chain of AI at the moment. And AI is a transformational technology, AI is a foundational technology, and you have to look at it as such. So if you were, in an era where electricity was being discovered and you were only focused on copper wires, then I think you would kind of miss the, whole trade that would come from massive electrification and industrialization that came at the back of that, and household consumption, and just changing user habits at the back of that. If in the and similarly, if in the internet era you were only focused on the optical fiber and the cable and the routers, then you would totally miss that there's a Netflix that is possible, there's online travel operators, Google, Facebook, right? Like you would totally miss that thing. So I think when there is a foundational technology, yes, the supply chain is important because that's an enabling part of the technology. But you have to also keep your eyes on the price, which is where the applications will come and use cases will come. And I think that is very, very important. The second thing is, and by the way, I'm not saying that India not having a foundational model, like a massive foundational model or chip manufacturing ability is positive. I'm not at all saying that. And I think today I would associate these things with sovereignty, rather than, as being a delimiting factor outside of sovereignty, as being a
So,
delimiting
Sachi,
factor to India participating.
so
Sorry.
Sachi, when you're looking at fund investors who really don't may not know, a lot of fund investors who may or may not know too much about India, someone sitting in London or New York, and people who are not sort of thinking about India at as a the way that you and I are thinking about India. So why do you remain so for people like that? What is the case? I mean, I can see that you're bullish about India. Why are you bullish about India, and why would a fund manager put money in India today?
Oh, so let me give you an example. Okay. India did not participate in, either the standards or the chips or the operating systems of the mobile technology, right? We didn't have Samsung, we didn't have Apple, we didn't have, Nokia's of the world, right? Um, but India took that mobile technology. India literally leapfrogged from pigeon to, cell phone to mobile telephony, because we could never supply those landlines in time. India then took that technology to completely structure its citizens' identification mechanism on based on that mobile technology, and then took that and transformed the entire legacy banking system to make, sort of banking on mobile, and completely, proliferated banking across the country. And then they took on top of that, the UPI and the RuPay, and made payments infrastructure like none exists anywhere else in the world. What I'm trying to say is, you can take a technology, your ability to restructure around it, your ability to, sort of adopt it, transform on it, and build on it is what will define the winners and losers of the AI trade. And
Right.
that is a bit that I am focused on. That is the bit that I keep looking at. Who are the people who are going to take this technology and completely, transform it and use it to transform and, solve the problems of India? And I think that is where Indian youth, Indian engineering talent, Indian, sort of the technical talent, the chip design and all of those talent, the youth that is so open to adapting new technologies, so open to tinkering with new technology. Look, I'm sitting in Europe. I can tell you there is day and night difference in
Hmm.
how people here perceive technology versus how they perceive in India. And it is those things that will define the winners and losers. And by the way, US AI companies do not want to be ice cream shops on an island.
Hmm.
They also need markets. They also need, populations, and to adapt and accept their technologies. We have seen,
Right.
since mobile, since social media, China has been kind of, sort of walled against US technology, and India has been very open. So I think those are strong favorable things in India's context, and this is what I think foreign investors should be looking at. Where is the puck going?
Sachi, what is your sense about the falling rupee and the rupee's weakness, as it were? How much of a dampener that is when people make investment decisions?
It is a huge dampener. I mean, there is no doubt about it. And I think in the last 5 years, we have seen at least like 28, 30% sort of, rupee depreciation. And when you compare it to, some of the other countries, I mean, people are not used to that kind of, currency depreciation. Now, having said that, India has been almost on a glide path on that currency depreciation, and you can say like 4, 5, 6%. March of this quarter was obviously a very, very volatile and very, sharp upsurge in that depreciation. But otherwise, it was a glide path. If you look at other currencies, including, by the way, Japanese yen, you would see like it was like up 11%, up 13%, down 13%. So people don't like currency depreciation, but to the extent there are reasons for that, a glide path is easier to manage and hedge against versus something like a Brazilian currency that goes up and down. On either side it can go up and down, but it is a huge dampener. It takes away from the returns of FIIs, and it is, I think the government and the RBI has taken very proactive steps now, whether it is the FCNR
Should they do more?
deposits.
Do you think they need to do more?
This is a very tricky one because central governments and central banks, half the game is in, do they get seen as they are in control, or do they get seen as they are desperate? It's a very tight rope that they walk. I do not envy any central banker. And I think RBI has done a phenomenal job in maintaining that control, and yet doing things proactively to uh, contain the volatility in the currency, and now shore up the currency, whether it is through debt instruments, tax incentives
Right.
on debt instruments, or FCNR deposits. If I can add one last statement, I just want to say on a lighter note, I think in India, a lot of people invest in, what we call a Sharma ji ka beta style of investing. So you're always looking at what somebody else is doing, what some other country is doing, what some other company is doing. And you don't even have the intention to invest in those other countries or companies, because you will never invest in a company that has free cash flow declining or no hope for profit and the volatility. But we just like to beat our own children, giving the example of Sharma ji ka beta. And I think Sharma ji ka beta style of investing is maybe not the best idea. It's a lighter note.
Well, on that note, Sachee Trivedi, thank you so much. Always a pleasure talking to you.
Thank you so much. Bye.